Hey, good morning. This is Mayor Valensky with Driving Markets. Let's have a quick catch up of what happened yesterday, where the action was. Okay, so yesterday the markets went down, led by the technology sector and led by the speculative growth sector, purely based on fear of interest rates and fear that the Fed will take more aggressive action. We'll come back to that in a few minutes. Let's look at the drive downwards. Remember, when there's a fear out there that money is going to become more expensive, then there'll be a run, an escape from speculative stocks like the Nasdaq or growth stocks or the lower stocks that look like they're going to rise in a low interest rate environment. They're dumped and then people run for safety. So a lot of the pharmaceuticals, a lot of the retailers moved yesterday as a safe haven. However, later on in the afternoon, the investors came back and began to buy into the market. So the market closed on a slight up. The Nasdaq closed up 8 points, but at one stage it was down more than 270 points. So it managed to claw back its losses. And this shows that there is investor appetite to pick up cheap stock. Now, my opinion is that the trend is downwards. If you look overall from the beginning of the year, the trend is down with some bounces here and there. And this yesterday was a break of the 3-day losing streak. You have to remember that investors are nervous of interest rates. The driver in the markets today is what are the central banks going to do regarding interest rates, where they're going to put them. And yesterday, the St. Louis president of the Federal Bank, James Bullard, said that the Fed is well behind the curve. What does that mean? It means they haven't taken enough action yet to combat soaring inflation. And if he is one of the hawks on the FOMC, the Federal Open Market Committee. He's talking for a 3 and 3.25% interest rate by the end of the year. I'm calling for a 5% interest rate by the end of the year. From the beginning of this year, I've said that interest rates are far too low. In order to combat inflation, we're going to have to get to the 4.5-5% level minimum in order to combat inflation, because you've got the geopolitical factor and you've got the economic factor. Remember, inflation is being driven at the moment by a supply-driven inflation issue. There's been a lack of supply and huge demand. Yesterday, look at the labor figures in the US, lowest unemployment since 1968. In other words, you've got a full employment environment. And if you've got a full employment environment under normal economic circumstances, you're going to have inflation. However, when you've got full employment, geopolitical, supply-driven issues, put those three together and you're aggravating inflation to such a level that the central banks need to take significant measures. Yesterday, the 10-year Treasury was at 2.66%. That's the highest it's been in 4 years. Shares that suffered as a result of yesterday's fear was Amazon and Microsoft, Apple. They all came down. Twitter, as I said, Twitter came down, and I said to you yesterday, the likelihood is that Twitter short term is likely to come down, but longer term, not the 1-day trader and not the 2-day trader, longer term, you're looking to get Twitter up there. Why? Because Elon Musk has taken a significant shareholding. What else happened yesterday? Look at Warren Buffett. Warren Buffett, unbelievable, incredible investor. He's gone and taken 11.4% share stakeholding in which company? HP, Hewlett Packard, the printer and PC manufacturer. He is now a major shareholder. He's gone on a shopping spree, and he wrote in his letter to shareholders that he sees significant value in HP, and you can expect now HP over the long term, not the short term, to start growing with Warren Buffett as a shareholder. No doubt he'll also be elected to the board. He bought 121 million shares, which was registered on the SEC, Securities Exchange Commission's filings. They noted that Warren Buffett is now owning 11.4% of HP. Let's look at the FX market. FX market is going to be looking at dollar strength. As long as there is fear and concern that interest rates are going to rise, you're going to have dollar strength. The dollar is only going to get stronger on speculation. Take that into account. Other FX, look at the Aussie dollar versus the yen. Aussie dollar, it looks like a buy, and the yen looks like a sell. So that particular pair Aussie dollar, Japanese yen. Go long the Aussie dollar because interest rates in Australia likely to go higher. Take that one into account. Also, Bitcoin. Bitcoin came off yesterday significantly down to the 43,000 level. You could have a short-term downtrend on Bitcoin all the way back to 35,000, even 32,000. If that was to happen, be aware that that looks like a major support, and from there you could actually pick up some Bitcoin and for it to trace all the way back and then to start rising back up to the 47, 48,000 level. I still believe long term that Bitcoin is going to exceed the 68,000 level. But those listeners who keep saying, but you said this and you said that, I'm telling you, overall, there's a long-term view, there's a short-term view. If you need any more information, you can contact me on LinkedIn, contact me on WhatsApp, contact me on Instagram. I do also reels on Instagram just to give a quick update on where the markets are at if I can during the day. All depends where I'm at. This is Mayor Valensky with Driving Markets. Have a good day.